Now for the Wall Street beat. After the global sell-off took place earlier this week, some of the world's biggest hedge funds lost hundreds of millions of dollars as a result of being in the most popular of tech stocks. But the market turmoil helped Brevan Howard's flagship hedge fund swing to a profit for the first part of the year here. Joining us now is Bloomberg hedge fund reporter Hema Parmar, who's had her eyes all over the industry, and it's been a very volatile year. When you look at Brevan in particular, I think it's an interesting moment for macro funds to be capitalizing on things. They had lost some money earlier this year due to wrong way bets on Fed cuts. How did the turmoil help?
Yeah, so you're actually seeing an example of a fund doing well in this market. They were down before July. Now they're up about 1%. They made about a 2% gain in the past couple days, which is, really good for them. They have been saying since January that the market isn't pricing in enough rate cuts to come, and so they are expecting more to come. And it looks like their bets have helped them.
What's going on at Light Street?
Yeah, so this is a fund that is not winning, down 9% in 1 month of July alone. They may be down more when you look at the turmoil in August. Up 40% for the year, but keep in mind this is a fund that has big bets
40% for the year, including the bad month.
Including the bad month.
Yeah. That's what I was going to say. They did really well before this.
They did, but they're still digging themselves out of 2 years of losses. In 21 and 22, they were down a collective 40%. So, they're trying to dig themselves out of this high watermark. Their biggest position, NVIDIA, about 17% of their portfolio as of March. Sizable chunks in these tech stocks, and that can work for you and the market's great, but when you see a really difficult month, it can really backfire.
How about some of these Tiger Cubs? It's interesting to see what's happening at Tiger Co. 2. They had similar problems, to my understanding, as Light Street. How does this year complicate getting out of that kind of high watermark moment that they're grappling with?
Yes, a lot of funds had a very difficult couple years and need to try to get out of that hole. And so, every month matters. Every month that you're not making money impacts the year-to-date return, impacts what investors expect, and will impact whether or not they continue to stay in the fund or they give it more time. So, until investors are made whole, the firm is also not charging fees to the full extent. And so that impacts how much they're bringing in terms of expenses and revenue.
Joe, pull up that full screen again of their holdings, because I think it's interesting to look at the fact that they're green check marks on almost every single one of these stocks for almost every single one of these hedge funds.
Yes.
I mean, it's a herd.
Concentration risk you're worried about, too.
Exactly.
Precisely. So, these funds, generally Tiger Cubs, even some that are not, these are their top 10 positions. Their biggest stakes are in these companies: Meta, Amazon, Microsoft, NVIDIA. So it's unsurprising that when you see a very difficult month in tech, that you see this pain kind of across the board to different extents.
But why pay 2 and 20 for that? Why don't you just buy the cues?
There were some funds up. David Einhorn was up. Rentec was up. So let's not throw all the babies out with the bathwater, Matt.
And they're less tech focused too. So they're more healthcare and other things too.